A reversal is when the direction of the price has changed from going up to going down or vice versa. So in this video, I will show you how to identify reversals in my strategy for both buy and sell setups. And actually, that reminds me, everyone here is interested in trading, whether it's trading stocks or Forex. So hear me out. If you're looking to start trading or already trading with little to no success, you should remember to trade with a regulated broker. They are bound by the law to offer complete transparency, so you know what's happening to your money. They also give risk warnings and fraud protection. To make your search easier, I linked a regulated broker down in the description that even gives a $30 trading bonus once you sign up. It will be the first link in the description. Before watching this video, make sure to check out my previous video on indicators so you can have the same indicators shown in this video. Now, to identify a reversal, you need to look at the previous day's high and low, which are visible through the use of the FXN indicator. Once you've identified the low and high, in a selling bias, if price falls below the Asian box and bounces off the previous day's low, only then would you look for a potential reversal buy setup. On the other hand, in a buying bias, if price rises above the Asian box, bouncing off the previous day's high, only then will you look for a potential sell in an uptrend. I will put some examples up on the screen of live chart setups, so make sure to study them religiously. And that concludes this video. I'll see you on the next one.